Wee boy, oh boy, oh boy, oh boy. Good morning and welcome to the Crypto Mining Show, your one-stop shop for all things cryptocurrency from the perspective of a cryptocurrency miner. Today, we have a lot to get through, and it's a little early because I have other obligations to attend to. That seems to be the case more and more often as we get closer to things like tax season, as well as just general life needs. We also have kiddos in the background, so be prepared for that because, of course, there is no school today. We have 3 new miner releases to talk about. We also have basically some interesting moves from the Fed banning trading of stocks and cryptocurrencies for internal employees. We have the Bitcoin dip that's going on right now. And of course, all of the speculation surrounding that from Ukraine and so on. We also have another little piece. Last night's video or clip was regarding, of course, the removal of videos from BitBoy. Mean Hash sent me over some information basically on an appeal reversal on the BitConnect trial that actually happened a couple weeks ago. I do want to cover it so everybody's up to date on that. We also have Opensea getting hacked. That's another big one. Lots of crazy stuff happening this weekend. It's hard to keep up with all of it. We're going to try to get through it. We also have quite a bit of mining news from the perspective of hardware. We have new information from Nvidia for mining specific GPUs. We have details on the Intel miner, their ASIC miner, as well as we have basically speculation surrounding the world's best in class ASIC miner and whether or not it was true or not true. And we're going to get into all that. At the end of the show, of course, we'll be talking about mining profitability primarily and as it sits today, along with the, of course, profits of my personal farm. And that's kind of how I've been gauging it. It also adds to the transparency so you guys see what we got going on over there. And we'll see if there's any good ASIC pricing or GPU pricing going on as well. I have heard of some pretty good deals happening here and there for GPUs, so definitely get out there and start looking for them. But before we get into all of it today, let's run the ad. Today's sponsor is myself. To support the channel, click the join button below the video and you will get access to our privately hosted Rocket Chat. Selecting the $1.99 option will get you access, and after that you need to head over to the membership tab, scroll down, and expand out your membership perks. Find the section for connecting on social media, and in that section there will be a secret registration URL to join Rocket Chat, where you can sign up to enjoy talking with other cryptocurrency enthusiasts and miners without spammers, scammers, or bots. Boom, and welcome back. Brought to you by myself today. Definitely don't forget to check out the shirts down below as well. My favorite is the Keep Calm Mine On, and you should get it as a reminder through these tumultuous times. I can never talk. We're going to get through it one day. I figure the more I do this, the better we're going to be able to talk. And I say we, referring to myself as we, because I have mental illness. Let's get into G Miner release 2.79. And it released 2 days ago. Added ETH hash and TON solver for Nvidia GPUs. Light hash rate and non-light hash rate cards are supported. You can use the dual intensity switch or the DI command line argument to control the TON mining impact on ETH hash. Miner automatically tune dual intensity by default. The ET hash fee is 1.5% and the TON fee is 0%. They also added TON solver for Nvidia GPUs and that fee is 2%. And then the fee for the ET hash mining in single mining mode is 1%. So basically in dual mining, they're taking all the fees out of your Ethereum and none out of your TON. If you do TON only, they increase the fee to 2%. And then if you're only on Ethereum, it's 1%. So the fee structure there is going to be important to understand. We may have to sit down and try to figure out with all this dual mining, what's going on with all the fees. They're ever evolving and changing. And I think that that would be maybe a good video for us to take a look at once we get like a full set of miners that support the dual mining, right? because fees could have an impact, of course. Part of the problem there is that the performance disparity across the board seems to be quite stark. So, you know, LOL miner versus Team Red miner on AMD GPUs. Like, obviously Team Red miner is outperforming it. Once again, though, with all of these miners, what I still notice is the most stable all the time for all the cards in any configuration appears to be LOL miner. And that's my experience. I'd like to hear y'all's experience in the live chat as well as the comment section below. What's the most stable miner for dual mining that you've currently experienced? Is it T-Rex now? Have you moved over to that? Is it LOL miner? Are you fine on Team Red miner with the improvements they've made? So on and so forth. Let's hop into the next one. We have a release from Team Black miner yesterday. So that was a release on a Sunday, version 1.56. They fixed GPU timeouts on AMD and fixed rejects at Crazy Pool. So, you know, at this point, sounds like they're just, you know, ticking along with their nightly releases of Team Black miner, which is actually kind of a joke because we didn't have one for 12 days. I think they took a vacation, which was, you know, a little bit of a break for us on the morning show as we cover these every day. It's like a new release from Team Black miner, a new release from Team Black miner. We got a little break, but we had a new one today. Not too many changes, but it is what it is. And then finally, we have a new one from Team Red miner, really picking up the releases lately. This was released an hour ago. This is Team Red miner version 0.9.3. The ETH plus TON now supported on all AMD GPUs. This includes Polaris. So that's pretty nice with nice performance, it says. Now I have an RX 580 laying around at the farm. I'm going to go try to pick one up and bring it back here and get it tested. They're claiming 600 to 750 megahash a second on TON with an RX 580. That's pretty crazy. You're talking about like breathing some new life into Polaris here. So they added Polaris support for dual ETH plus TON, full ETH plus 600 to 750 megahash a second TON per GPU. All AMD GPUs now supported. They updated the dual mining ETH text with information for all AMD GPUs. They added support for TON pool. So we now have a third pool, I believe, at this point supported on Team Red miner, which is desperately needed, of course. And then they fixed a bug that could cause stale shares on GPUs disabled for dual mining, which that's interesting that they kind of introduced a new bug for solo mining, or not solo mining. Well, what do you call it? Single mining. Mining one coin. There we go. So that's how that clocks out. If you guys get any chance to test Team Red miner version 0.9.3, please let me know how it works on your RX 580s in the comment section below or the live chat. This is a pretty big deal, I think, for a lot of people because the Polaris seemed to perform like super solid just on ETH as far as like reliability, and they just keep cranking. Their temperature's not necessarily that high, so you could add on this dual mining and probably get away with it pretty easily. I'm also curious on what the power consumption ends up being for that as well. Now we get into all the fun stuff. It's going to be a rough week, guys. From my understanding, Biden's looking at an announcement of some sort of regulation surrounding crypto. Whether or not that's going to be an executive order, for sure, I'm not positive on, but I expect that to impact the markets. We have lots of controversy surrounding cryptocurrency in general. We have the Ukraine thing going on, which I'm not fully up to date with past last night. And the world ends tomorrow on 2/22/2022, so you got to get prepared for that as well. Make sure you're locked and loaded for the end of the world, as the new conspiracy that released just a few days ago came out with. Definitely go check that out if you want some entertaining reads on Twitter. Obviously on YouTube, we can't really discuss it, but it's just a fun note. World ending tomorrow. Let's get into Fed approves rules banning its officials from trading stocks, bonds, and also cryptocurrencies. I think we did already talk about this. It actually gets interesting. I believe we haven't on the morning show, so I wanted to cover it. I've been talking about it on Twitter pretty extensively, and then I forgot to review and see if we actually talked about it last week. But just a quick, brief overview of this. Key points: Federal Reserve officials will be restricted from owning individual stocks, bonds, and other assets under rules announced Friday that were set forth in October. The new regulations extended to and ban to cryptocurrencies, which were not included in the previous announcement. And they follow a controversy last year in which several officials traded positions just ahead of the Fed's extraordinary measures to help the economy through COVID crisis. Now, here's the problem with all of this in general is this is only for the Federal Reserve officials. This should be applied to all government officials, in my humble opinion. The fact that you have somebody like Pelosi making $200,000 a year, but is worth over $100 million is absolutely disgusting. And while we do live in a free market, there is a sacrifice I think you make when you become a public official. Your goal is to serve the people, not to serve yourself with insider information to advance your own equity within whatever society you participate in. Now, that being said, if you want to move out of the public sector and into the private sector, that's also where things get a little bit murky, but I think that should be okay. There should be ways to reintegrate back into the private market if you so wish, but there should probably be some sort of regulation on how much time you have to participate within markets, etc. That's my opinion. Now, there is a fun tinfoil hat theory going on here, to be clear. And that tinfoil hat theory is that this is setting up to basically have an excuse to sell off en masse, basically, all of the investments before a market crash, meaning that the Federal Reserve officials are aware, essentially, of an incoming economic crisis, and they don't want to alert the public of this with a huge sell-off. So if they create a rule that allows them to basically sell it off under we're not allowed to own it anymore, then they would be able to mask that for a little bit longer. Obviously, that's a crazy tinfoil hat theory. It is odd. Why, if you control these regulations, just right, if you control these regulations and you're making a ton of money off of it, why would you just go ahead and ban it, right? And not allow yourself, the rule maker, to participate in something that is, financially beneficial to you as an individual. It's a little weird. Usually you don't expect that. Now, I could be wrong as far as like who implemented it versus who was making money off of it. I assume we're all people and there's just the same dynamics within all of these organizations of people that have higher ethics than other people within the organization, etc., and it doesn't function any different. Now, the timing on this, which I think everybody should be aware of, is going to vary depending on if you already work for the Federal Reserve or if you are moving forward or moving forward, you are hired. So basically what's happening is this will take effect on May 1st, and then they will have 12 months, from my understanding, from May 1st to liquidate their positions. So that would be all the positions being liquidated by May 1st of 2022. New employees coming into the Federal Reserve would essentially have 6 months, and I don't understand exactly if this is just from here on out. What it sounds like is if you get hired, you have 6 months to liquidate all of your positions after being hired. So that's kind of the timeline. We're looking at May 1st of 2023. How this impacts the market should be interesting, and what ends up happening, obviously. I'd like to hear your thoughts, obviously, on the conspiracy, because conspiracies are fun too. Just make it clear that that's not necessarily, that there's no proof or anything like that. It's just a fun conspiracy that I thought I'd mention. I think somebody had turned me onto it on Facebook, so I was like, okay, we'll talk about it. We'll get into it a little bit. And we have more stuff. We have more bad news for the markets. This one is basically inflation breaks even, does offer hope though to the bulls. And this is coming from CoinDesk today. First mover Americas, as Bitcoin dips, inflation breaks even and offers hope, to the bulls. The latest moves in the crypto markets in context for February 21st, 2022. And so essentially, here's what's happening this morning. Market moves. Bitcoin reverses early gains as Kremlin dashes hope for Ukraine peace summit. Like I said, this is the Ukraine deal is really what's pushing a lot of people off. And part of the problem is that cryptocurrency is not being treated as something separate from the stock market. It seems to be highly correlated to it, which definitely means institutional investment is going on in it, which could be considered a good thing from the perspective of price, right? However, what that also means is that it's strongly tied to the stock market. And in theory, like if we're looking at specifically Bitcoin, because we went over the idea that like there's a difference between Bitcoin and Ethereum and how they function. Ethereum definitely more centralized, and then Bitcoin, the decentralized kind of savior, fix the money, fix the world principles. Those need to decouple, and Ethereum, I think, perfectly fine to follow the markets, the traditional financial markets. Bitcoin, I feel like, shouldn't be following the traditional financial markets. However, because of this institutional investment, that is what is happening. So U.S. inflation break-evens suggest Fed's tightening cycle may shallow, support Bitcoin's long-term bullish prospects. So Bitcoin is back on the defensive, with Kremlin calling the idea of a dialogue between Russian President Vladimir Putin and his U.S. counterpart Joe Biden premature and dashing hopes of a potential Ukraine peace summit. The cryptocurrency was last seen trading near 37,600, representing a 2% drop on the day. Prices hit a high of 39,500 during the European hours after France championed the idea of a Biden-Putin dialogue over Ukraine. Rest of the cryptocurrencies have come off daily highs, tracking Bitcoin, with Ether funds seeing renewed outflows, according to ByteTree data. With the U.S. markets closed on account of the President's Day holiday, Bitcoin appears to be the only macro asset available for trading in the spot and derivatives market. As such, escalation of tensions between Russia and Ukraine may lead to sharp losses in the cryptocurrency. So that's important to note. Basically, today we have the President's Day holiday. That's why we have the kids home here. And I'm sure you guys have that same situation going on with you all, or in daycare or whatever it may be. But it's interesting because those markets are closed down. So really the only thing that can take the force of whatever market influences that are happening on a geopolitical scale is going to be cryptocurrency today. And so whatever you see potentially that happens today could translate into the markets tomorrow, which could be interesting, almost like a foreshadowing of what's going to happen. The daily chart paints a bearish picture with a rising trend line convincingly violated alongside a below 50 or bearish reading on the relative strength index and a negative MACD indicator. The double whammy of Fed fears and lingering geopolitical tensions are likely to keep Bitcoin under pressure in the short term. Calls for a 50 basis point rate hike in March have grown in the wake of a hotter than expected January inflation data released earlier this month. But break-evens support Bitcoin's long-term bull case. Despite recent crash, Bitcoin bulls remain convinced of the cryptocurrency's long-term prospects, with many anticipating a shallow Federal Reserve rate hike cycle. Data on U.S. inflation break-evens, which signal the expected path of price pressures over different timeframes, suggests they might be right. The spread between the 10 and 2-year break-even inflation rates fell to a record low of 1.2% last week. That's perhaps a sign of market players expecting inflation to drop back in the long term, weakening the case for aggressive and prolonged stimulus withdrawal by the Fed. Quote, it's another way of telling us that inflation will drop back in the longer term, thereby possibly cutting the life of any Fed tightening campaign. An inflation level that is high enough to eliminate deflation fears, but low enough to keep Fed hawks at bay, end quote. Ashraf Laidi, the strategist and trader, founder of Intermarket Strategy and author of Currency Trading and Intermarket Analysis, said in a blog post. Inflation break-evens are calculated by subtracting the yield of an inflation-protected bond from the yield of a nominal bond during the same period. The record low spread between 10 and 2-year break-even rates suggests the Fed tightening fears may be overdone and Bitcoin could survive the impending liquidity withdrawal. According to Laidi, the narrowing spread probably helped gold chalk out gains in recent weeks. Meanwhile, Bitcoin, touted as digital gold, failed, perhaps due to its tight correlation with growth stocks. And this is kind of what I'm talking about. I also don't think that necessarily should be tied to gold. I think there's a difference. I think there is a subtle difference between, a digital asset and a hard asset, as there should be, right? The question is, as miners, from our perspective, does gold generate revenue for you? Is there an active way? And if you really can't get into mining gold, which is very difficult to get into, right? Then you're looking at a lower barrier to entry. Now, I was talking about this in relation to proof of stake too, which I think I do need to clarify some positions on as well, because there seems to be a misconception when we get into reaching out to the markets or to the cryptocurrency investors that are outside of the mining sphere, especially when it comes to proof of stake. There are comments like, oh, he's looking for a way out, or, you just hate proof of stake because you won't be able to mine and make money anymore. And I can see how that perception would be, but you need to keep into account here, as a miner and as large miners, especially large GPU miners, really you have a couple different sets of classes within Ethereum in particular when we're talking about the move from proof of work to proof of stake. You have essentially the IPO investors, all the people that basically got all the coins before everybody else and pretty much held on to them and are going to be the elite ruling class, including developers, people that work from that perspective. Then you have the miners, which would, in a lot of cases, be essentially the worker class, right? So the people that are putting in the work to maintain the economy and keep all the transactions flowing and everything functioning. And that working class obtains the Ethereum, in this case, basically in return for that. And then you have the participating class, the people that are the consumers of the product, right? The consumers of Ethereum and all of that. Now, what they are doing is they're transacting on the Ethereum blockchain to trade things, maybe like NFTs, etc., whatever that may be. So you kind of have a historical class system that is setting up here that we've talked about in the past. Now, the most benefit from proof of stake will go to that kind of ruling class of elites that got into the IPO early, or the developers. And the reason for this is, like we've tried to elaborate on for a lot of people, that seems to not really get through down to the consumer class, is that essentially, basically, when proof of stake comes into play, you will have a consolidation of the Ethereum towards the upper class, towards the elite class. Now that will filter through, if so chosen, to the miners as well. Not to the same significance as the initial IPO investors, but the miners will have a significant advantage over the consumers at this point because they have been mining and stacking Ethereum. So in theory, for example, like last year, I personally, on a small farm, mined enough Ethereum, 40 Ethereum, to go ahead and actually have a full stake myself if I so chose. That would actually potentially be better for me because I would be able to now, off all of the transactions, just stack up more and more and more and more, create more stakes, and keep continuing on. There is no longer a low level or barrier to entry for new people. Let's say you're a consumer and you want to get into the validation process. You got to save up 32 ETH, which is going to be astronomical. So, and that's going to be even harder to do if everybody that is creating and earning the new blocks has a huge advantage on you from mining or from the IPO. So at my own detriment, I am touting the idea of easier barrier to entry to help further decentralize the network. I want you to have the same potential for earning and validating on the network as I do or anybody else does. Is that even possible with Ethereum because of the IPO? Because of proof of stake? Probably not. This is the issue that we get into. Now, it gets even sketchier now for the week. We're going to talk about this. Last night I posted a clip about BitBoy deleting videos. Mean Hash said it could be because of this on Twitter. Definitely, he's a great follow on Twitter. I'll leave a link down below. But essentially what has happened, this could have no correlation, but I think I want to address this because then you guys will understand my perspective as a content creator, especially when it pertains to taking on ads, which sponsorships I choose, and that sort of thing, as well as being aware of what has been happening within cryptocurrency influencer space, whether that be on Twitter, TikTok, or YouTube. And if you are a creator, being very aware of where the waters get murky and you need to be careful with your own sponsorships and channel practices, okay? I'm only going to be covering essentially the official court documents and basically let you guys know exactly how this went down. To give you some background, back during the previous cycle in the bull run, there was something called BitConnect. BitConnect! If you've been in cryptocurrency for any period of time, even post that, you've probably seen the BitConnect memes. Now, BitConnect was very clearly a pyramid scheme. I think even back then, before everybody got busted and all that sort of thing, I was talking about the pyramid scheme. Bitsby Tribbin was talking about the pyramid scheme. Lots of people were like, yo, this is not a good idea. Stay out of it. Well, there were some influencers that were using the affiliate links and then talking about their profitability on BitConnect on YouTube and other basically social media outlets like Twitter as well. Now, the way that this worked, essentially like we would expose on the channel, is that because he has all of the referral links basically going through their channel, they're stacking up and basically making their wallet look more profitable. On top of that, there were other revenue streams because when people would sign up with their referral link, then they would get that, but then obviously that would also drive up the price of BitConnect and kind of in this crazy scheme. Now, everybody kind of got in trouble, blah, blah, blah. Then it went to the wayside. And that was because essentially there were rulings that went into place that said, there won't be any prosecution on this or whatever. A couple weeks ago, what we had here, though, was this release. Let me see. We'll get this up. This is coming from Pally on Twitter. It's linked down in the description. 11th Circuit Court of Appeals reverses trial court decision in BitConnect case and holds that peddling, crap coins in a non-targeted way on the interwebs, YouTube, Twitter, etc., exposes promoters to liability from purchases of unregulated securities. So here is basically versus the BitConnect International, etc., and Trayvon Brown, aka Trayvon James. If you are familiar with the YouTube channel name, it was Trayvon James. And so here's the important part. An online promotions team posted thousands of videos, all with a single aim, persuading people to buy BitConnect coin, a new cryptocurrency. But BitConnect coin wasn't a sound investment, it was a Ponzi scheme. After that scheme collapsed, BitConnect buyers sought to hold the promoters liable under Section 12 of the Securities Act of 1933 for soliciting the purchase of unregistered securities. The marketers insist that they cannot be held liable because the Securities Act covers sales pitches to particular people, not communications directed to the public at large. Not so, neither the Securities Act nor our precedent imposes that kind of limitation. Solicitation has long occurred through mass communications, and online videos are merely a new way of doing an old thing. Because the Securities Act provides no free pass for online solicitations, we reverse the district court's dismissal of the Section 12 claim. The only question here is whether a person can solicit a purchase within the meaning of the Securities Act by promoting a security in a mass communication. Arcaro insists that liability follows only when a seller directs a solicitation to a particular prospective buyer. Mass communications, in his view, are never enough. That rule would certainly go a long way towards eliminating liability for the promoters here and for others who champion dicey investments through modern communication channels. The problem for these promoters is that nothing in the Securities Act makes a distinction between individually targeted sales efforts and broadly disseminated pitches. At the end of the day, I've always drawn a hard line personally on this channel of no coin sponsorships, just period. Now, my goal with the channel is longevity and transparency. I think I've tried to make that as clear. I've probably even overshared, right? In personal life stuff, right? And the reason though that I do that is because I don't plan on ditching out at all. I plan on continuing the channel. It's something I want to do and something I plan on doing for long term. And I've already seen the likes of Trayvon James come and go. And the easy way to basically say, like, we're not participating in any of this is to stay out of the coin sponsorships, because that's going to be murky water. If I take money to basically pump a coin or something along those lines, or even talk about a coin, then I think at that point, I'm obviously compromised as a content creator, especially within the cryptocurrency space. And I think personally that should kind of go, if you're a content creator, that would be my suggestion, is to stay completely away from that. I also stay away from pools and that sort of thing. Now, where maybe in my particular case, I'd want to take a look is the gray area surrounding exchanges. Obviously, one of our sponsors is crypto.com, but that is a little bit different, especially through regulation, because I'm not telling you to purchase a specific coin or anything like that. Unfortunately, I do think you have to buy some Crow there to actually utilize the card. So that could be a problem. But also there's already precedent set with much larger organizations such as the UFC and so on. So that's kind of where my reasoning around that went from a legal perspective as well as from an ethical perspective on what kind of sponsorships I'll take within cryptocurrency and what kind I won't take. Another new thing that is happening within cryptocurrency that's very interesting is revenue for cryptocurrency content creators on YouTube specifically that's happening. And I believe BitBoys announced that they're talking about this as well. But you have essentially shared profit revenue, ad revenue, right? So on YouTube, the way it works is I make a video, I post it on YouTube, you guys watch it, an ad plays, I get paid for the ad that played. At a very basic level, that's kind of how it works, right? That's how you get to watch for free, and I get to essentially continue to do content creation as a paid gig. There is a new kind of option for content creators through blockchain, which sounds very interesting, where users or viewers can purchase an NFT of your videos and then earn 50% of the ad revenue moving forward, right? So I could be done uploading this video. You could go onto the NFT platform, purchase an NFT of this video if you thought this video was going to do good for ad revenue, and then in perpetuity, you would essentially get 50% of the ad revenue. I'm not sure that's okay either. It's definitely sketchy in my humble opinion. However, it is a neat idea. We're going to stay away from that on this channel in particular. I'd like to hear your thoughts on it though in the comment section below. And of course, live chat. Okie doke. So let's get into the Opensea phishing attack. So essentially, I believe it was yesterday. Yeah, because I was at a birthday party. I just said Opensea hacked. Everybody was like, well, it's a phishing attack. Here's the deal. I was at a birthday party. I saw the information. I tweeted it out so that people would see it and start doing the research. That's it. We have an official article here from CoinDesk. We're going to go over it, and then we'll kind of get a brief kind of top-down perspective on it. So Opensea says phishing attack impacted 17 users. Now, I'm not sure that's true, but let's continue. The attack also no longer appears to be active, as there has been no activity on the malicious contract for over 15 hours. Non-fungible tokens NFT marketplace Opensea says that 17 users were impacted by the Sunday's phishing attack instead of 32 users that was reported earlier. The phishing attack was targeting smart contracts on Opensea's platform. Quote, our original count included anyone who had interacted with the attacker rather than those who were victims of the phishing attack. The attack also no longer appears to be active, as there has been no activity on the malicious contract for over 15 hours, the company said. Opensea is still yet to determine the exact source of the phishing attack, first detected in early hours of Sunday morning, following rumors circulating of an exploit of smart contracts on the platform. CEO Devin Finzer, we'll go there, subsequently tweeted that 32 users had signed a malicious payload from an attacker and some of their NFTs were stolen. Blockchain security company PeckShield said that the exploit was most likely phishing, whereby users authorized the migration of their NFTs to a new smart contract, allowing them to be stolen. NFTs are digital assets on a blockchain that represent ownership of a virtual or physical item. Opensea is among the most prominent platforms in the NFT world, with a recent $300 million investment round valuing it at $13.3 billion. It has seen $3.7 billion of trading volume in the last 30 days, according to data from DappRadar. Okay, so one of the things I tweeted, because obviously, like if we're talking about a problem with Opensea, and there's a lot of people that have a ton of problems with Opensea. One is you can just re-upload other artists' content and it doesn't have any way to detect that that's already been uploaded to Opensea, and you can basically sell fakes, which is kind of hilarious because we're talking about NFTs. And then, of course, there are the security concerns surrounding this. Now, as a phishing attack, I don't put any of the blame on Opensea if that is in fact what is going on, because a phishing attack means that the end user has to have made a mistake. This is going to be individual responsibility. It's a little weird within a centralized system to basically put the blame on the user, which is kind of frustrating, right? Because if you are going to be participating within a centralized system, then you expect that centralized system to offer you some sort of protection. That is the benefit that the plebs always tout for the banks. But as we talk about in cryptocurrency, not your keys, not your crypto. And with great financial responsibility, or with great financial individual power, autonomy, comes great responsibility, that sort of thing. It's your responsibility to basically secure your funds, etc. And in this case, what you need to be aware of is what happens with a phishing attack is they will copy some sort of email that looks exactly like Opensea, or they'll have, basically buy maybe domains that are close to Opensea, like maybe it has one letter that's mistyped and you accidentally go to the wrong site and you connect your MetaMask wallet either through a link in your email or through there, and then you sign a contract that essentially steals your NFTs. Well, I say steal. At that point, you signed a contract that gave them your NFTs, in my humble opinion. Now, MetaMask, if that's what you're using, is a self-custodial wallet. Even if you're tying that through a hardware wallet, that's self-custody. It's your keys. It's your crypto. That is outside of the centralized platform, okay? So the mistake goes on to the individual. In this case, if you're the one making the poor moves and not paying attention to what you're signing and all of that. Now, the joke that I made, of course, was if people really are up in an uproar over Opensea right now, saying it's getting hacked and all of that, how many of the 80% of these NFT users, because 80% of the NFT users are currently on Opensea, know how to utilize any other platform? And the joke there is pretty clear, because like, if you aren't even detecting these phishing attacks, if you don't suspect something's weird when it's asking you to sign a contract within MetaMask when you haven't made an NFT purchase or anything, if you don't understand that sort of thing, then what's the likelihood of you like understanding how to move into Immutable X or Rarible or whatever it may be, or moving a whole blockchain over to Solana, right? Like, whoo, mind blown. So there is a lack of education within the cryptocurrency space as it pertains to new investors within the NFT market. And I think that is something that as a community, we need to figure out how to start educating people better. That doesn't mean that you dog on them and tell them they're dumb or anything like that. It means that you need to start trying to actually educate people on how these things function, what to look out for, and all of that. If this is all true and there was no internal attack, etc., I put the blame on the end user. Now, OpenSea's always had some weird, murky stuff going on within the company. And could there be other stuff going on? And this actually isn't, we can't take this at face value? Sure, but I don't have any evidence of that right now. If you have evidence of it, please tweet it at Son of a Tech, put it in the comment section. I need hard evidence, that sort of thing. We're not going to go off on any speculation here. The conspiracy theory, of course, the tinfoil hat would say there was a disgruntled internal employee that had left the company under bad terms and basically maybe had access to templates of the emails that look similar and was able to send those out. That's the closest one that I've seen that makes sense to me. It's still a phishing attack at that point, though. Let's talk about NuMiner, best-in-class Bitcoin mining rig. Is it real? Is it not real? Let's get into it. Questions swirl around NuMiner's best-in-class Bitcoin mining rig. Among other discrepancies, the chipmaker supposedly involved with NuMiner said they were unfamiliar with the project, when a previously unknown company claimed to have created a Bitcoin rig far superior to the industry standard this month. Many in the mining industry raised eyebrows. Since then, the red flags have kept piling up. An artificial intelligence hardware company claimed a photo of its product was appropriated to create the rig's marketing materials. The chip maker supposedly involved with the rig said they were unfamiliar with the project. The rig manufacturer admitted it had misnamed the lab that certified the machine and did not provide enough information for CoinDesk to corroborate the second lab it named. It's still unclear exactly what is going on here, but the situation offers a stark reminder that crypto remains a noisy industry where investors get bombarded daily with bold claims that invite scrutiny, particularly in the era of publicly traded mega miners where the financial gains at stake are enormous. Investors can never be too careful. So let's back up a little bit. On February 3rd, Sphere 3D, a Toronto-based data management company, announced it was acquiring 60,000 mining rigs for about $1.7 billion from NuMiner Global, a New York-based company that appears to have popped out of thin air. A search on the New York State Company Registry yielded 0 results for NuMiner. The company claims to be affiliated with NuMiner Technologies Limited, for which practically no information is publicly available. NuMiner said its rig, the NM440, generates 440 terahashes per second of mining power or hash rate with a power efficiency of 20.2 joules per terahash, according to the company, which is obviously wild. Such specs would make these miners the best on the market by a significant margin. It would top the world's biggest mining manufacturer's newest mining computer, Bitmain's Antminer S19 Pro Plus Hybrid, which boasts a hash rate of 198 terahash a second and efficiency of 27.5 joules a terahash, and uses liquid cooling technology to reduce heat, noise, and power consumption. Sphere 3D's stock surged more than 40% after the announcement of the deal with NuMiner. Shares have given back some of the gains since then, according to TradingView data. The doubts. When the news of the new miners deal broke, Luxor Technologies, the crypto software and service company, cast doubt on the story. Quote, when we saw Griffin's pre-order yesterday, we were highly skeptical, but gave the rig the benefit of the doubt due to Griffin's press release, Luxor tweeted. Sphere 3D is merging with Bitcoin miner Griffin Digital Mining in a reverse merger transaction. However, Luxor added that there are too many red flags to consider the NM440 a legitimate mining machine. Meanwhile, Fred Thiel, CEO of one of the biggest publicly traded miners, Marathon Digital, also tweeted that he was skeptical of new miners' claims and voiced concern about the cooling technology or the lack thereof. Based on the picture, I'd be concerned as to how this miner pushes enough airflow to stay cool enough to operate in a typical mining environment, Thiel tweeted. Definitely not designed for immersion based on the picture. Volt Equity, a San Francisco-based investment firm, also was quick to express skepticism about new miner and opened a short position on Sphere 3D stock. Volt tweeted it had reached out to the lab that new miner said had tested its NM440 miners and said the lab denied it ever tested the machine. The lab also told CoinDesk it never tested the machines. So who runs new miner? There's very little publicly available information about the company, but there are some clues about who is on the team behind this supposedly stellar hardware. New Miner Global has 3 people listed on its website, but none of them seem to have too much experience in crypto or mining. The company's CEO, Lane Kennedy, who most recently was a vice president of enterprise technology and supply chain at Canadian Tire, a retail company involved in the automotive hardware, sports, leisure, and housewares sector. Prior to that, he was global chief information officer at BlackBerry, the one-time smartphone pioneer, and global chief operating officer at Spin Master, a Canadian-based global children's entertainment company. The chairman of New Miner is Tony Melman, who is also a board chair and CEO of Novell Incorporated, a consulting firm specializing in mergers and acquisitions. He also served as CEO of Acosta Capital and Acosta Enterprises. The latter was a special purpose acquisition company that defaulted on its debt in March of 2018. Melman left the company that month, according to the Globe and Mail newspaper. Prior to Acosta, he was managing director and partner at Onex, a major Canadian asset management company, for 22 years. So Melman was also appointed to Sphere 3D's board as part of the $1.7 billion purchase agreement. The third person listed in the website is Bruce Brent, an independent director who is chief financial officer at real estate firm The Matthews Group, president of a family office, and chairman on the boards of renewable energy company and another aerospace firm. Affiliate New Miner Technologies did not seem to have much public information either other than the press release naming Thomas Su as CEO. The company also appointed a special research and development advisor named Richard Lee, who, according to New Miner Technologies, is a former R&D director with Taiwan Semiconductor, TSMC. New Miner representatives did not respond to CoinDesk's request to comment about this entity. So there was a merger that went on, and then the denials claimed working in coordination with TSMC. TSMC told CoinDesk that New Miner is not a direct customer. There's a lot of sketchiness going on here right now. So on February 7th, Cerebras, a California-based AI hardware firm, tweeted that a crypto mining startup company had misappropriated a photo of its CS2 system in an email to CoinDesk. Cerebras confirmed it was referring to New Miner and noted, in fact, you can see the Cerebras logo at the bottom of the system. See there, right here. Other than the Mountain Dew hue details, the images are pretty much identical. Here. Cerebras said it had contacted New Miner and the company has since removed the photo from its site. CoinDesk later confirmed it had disappeared. Griffin Mining, for its part, told CoinDesk on February 8th, no comments on this topic for now. New Miner has information they need to release first, and it's not our place to comment at this time. New Miner said on February 10th that it previously misidentified BACnet Testing Laboratories as its testing lab. Instead, the lab is called BTL Incorporated, a Taiwan-based testing company certified by TÜV Nord, the company said in a statement. Quote, the performance specifications of the NM440 have been independently validated by leading global testing company TÜV Nord's certified lab BTL Incorporated, a testing company based in Taiwan, end quote, the statement reads. The company has noted that the original image of the NM440 was taken down after New Miner was recently made aware of similarity in the product's image to another product on the market. The original image was drawn for marketing purposes, the statement said. New Miner is confident its revolutionary technology will transform Bitcoin mining, enabling customers to reduce energy usage and increase profits. The updated statement continued. Yeah, this is a mess. This is a mess. This is like, yeah, this is straight up a disaster. So essentially what you have here is the New Miner 440 real? I highly doubt it at this point. You have changing of basically the labs that tested and verified it. But the weird thing is the amount of investment that went into it, which, like, if you don't have like the internal information that is saying that this is true, and like, why would you make these large purchases? It's very weird. Do I think we're going to see 440 terahash, on a single Bitcoin mining rig? Not really. And we can tell this because we got to talk about this too. Intel has details on its Bitcoin mining Bonanza mine chips. And here's the deal. We thought that we were going to see from Intel basically a revolutionary miner that was going to be low power consumption and compete with Bitmain. Not the case here, guys. And so this is where I cast doubt on the NM440, because we have Intel, a much more experienced chip manufacturer, that has released their data on their upcoming BMZ2, and it's not good. Intel details its Bitcoin mining Bonanza mine chips and 3600 watt miner. Intel's 3600 watt Bitcoin mining powerhouse. At ISSCC 2022, Intel shared the deep dive details for its new Bitcoin mining Bonanza mine ASICs and outlined how it melds 300 of these tiny power efficient chips into a powerful 3600 watt miner that delivers up to 40 terahash of performance. Powerful? No. Power efficient? No. No, 3600 watts at 40 terahash is terrible. I have a knockoff ASIC miner, the Koi miner, which is 98 terahash at 3400 watts. 40 terahash a second at 3600 watts is absolutely grotesque. Nobody wants to be running that. It's crazy. So it goes on to say that they discovered Intel's Bonanza mine ASICs in a listing for a presentation at the ISSCC 2022 conference, and the information below comes from the presentations at the event. This material covers the first generation of Intel mining chips known as BMZ1. Okay, maybe I am confused here. I thought I had read this one. All right. Anyways, let's get into it. BMZ1 versus BMZ2. Maybe BMZ2 is 3600 watts at 80 terahash. All right. So let's continue. The material covers the first generation. All right. But the company has already moved on to its second generation. That it is now making available to customers to challenge the likes of Bitmain and MicroBT. After the news of the company's efforts came to light, Intel finally officially acknowledged its blockchain Bitcoin Silicon program, divulging that it already has several large customers for the second generation chips. That includes Block, helmed by CEO Jack Dorsey of Twitter fame, Argo blockchain, and Grid infrastructure. Intel hasn't shared details on the second gen chips of the systems yet, but we do know there are derivatives of the BMZ1 ASICs shown below. And then that's where they get into essentially all the specifications. They got 7 nanometer process, and then essentially the 40 terahash a second at the 3600 watt. So it's clear that Intel will need to be far more competitive against Bitmain and MicroBT's existing miners. For instance, Bitmain's Antminer S19J Pro 104 terahash does 104 terahash a second at 3,000 watts, while the newest model, the S19J XP, does 140 terahash at 3,000 watts. Again, these are Intel's first-gen Bonanza mine chips, but its new contracts are for second-gen models that remain shrouded in mystery. And it would be pretty incredible to me to see anything that goes beyond what the best performance of Bitmain is right now, if in fact the BMZ1 was this disappointing, meaning like essentially 3,600 watts at 40 terahash. You got to make up, I mean, you got to catch up, you got to triple or quadruple your performance on these things. Really got to probably quadruple at this point to really compete. 160 terahash at 3,600 watts would make sense. Can Intel do that from a Gen 1 to a Gen 2? Possibly, but it's also clear, going back to our previous point about the NM440, that building efficient ASIC miners is not an easy task. And even with massive resources, the first try from a Bitcoin mining ASIC company is not going to be very good, right? If Intel can't come out swinging on their first gen in anywhere close to Bitmain or even MT or any of the other chips that are on the market, what's the likelihood of some out of nowhere company coming up with it and completely wiping the market with it, wiping the board with it? Pretty low. I don't think the NM440 actually exists, but I definitely question where all this money is coming from. Is it a great scheme that's going on? Possibly, but we have no evidence to confirm that. We do have new GPU mining information coming out from WCCF Tech. Nvidia CMP100HX is Volta GV100 GPU repurposed for the crypto mining segment. Nvidia seems to be repurposing its data center specific GV100 Volta GPUs for the crypto mining segment in a form of CMP100HX. Nvidia's 12 nanometer Volta chips was the first to utilize Tensor cores specifically developed for cores with special deep learning implementation over standard CUDA cores. Nvidia is revealing the company's compute accelerator for crypto mining businesses. The company's new graphics card supposedly offers an identical PCB layout as the Titan V. The Titan V is the only model for the consumers that the company has unleashed with the Volta GV100 GPU, presenting outputs for the display. The CMP100HX appears to lack display outputs, but delivers two 8-pin power connectivity. The photos first appeared on PC shopping forums via Twitter leaker Komachi blah blah blah. There you go. Video Cards notes that the original PC shopping thread does not display a card picture, but states that the comparisons to the CMP100HX appear highly similar. Nvidia's new card offers a passive design, suggesting it is not to be used in a PC setup, but preferably a server setting, or in this case, a group of graphics cards for crypto mining designs. You could submerge them or, put them in the server mining cases like the Rosewills or the Octo miners, etc. The crypto mining cards additionally offers the NVLink connector, which seems out of place due to having no proper use in digital mining currency. That is odd. The CMP100HX is declared to offer close to 81 megahash a second at 250 watts of power consumption, sharing a similar use of the power as the Titan V. The unknown equation of the card is if it will share similar configurations of memory as the Titan has, which offers 12 gigabytes of HBM2 memory. Nvidia is known to reduce the size of remembrance for the company's CMP line. So here you go. That's where we're at. During Nvidia quarterly earnings call for 2021, the company disclosed that the CMP industry has declined over the most of 2021, starting during the second quarter. If they actually just priced them well and sold them to the public so that we could have a decentralized GPU mining market, they'd be selling more. The thing is, they want to sell huge bulks of old chips for a price premium in bulk to large mining farms. That is the issue. So if you guys want to figure out how to actually service the GPU mining community, fix that or get rid of it and move all of that manufacturing to just the gaming GPUs. Don't worry, the miners will buy up any extra stock you got. All right? Quit doing this crap. It's getting ridiculous. I have yet to get any of these, by the way, but you have the 30HX, 48HX, 50, 90. Here's the 100 to be announced. There is also apparently 220HX in rumor, 210 megahash a second, 250 watts for 81 megahash a second. Pretty good. That would be a really efficient mining card. And it would probably be really nice in Octominer chassis if it is indeed passively cooled. That would be pretty incredible. And I think just like chat's saying, I've never seen a CMP in person. Neither have I. Don't worry about it. Nobody talked. I emailed every manufacturer, every third-party board manufacturer that said they were going to get them. I emailed Nvidia directly. The only response I got was Nvidia directly, who told me that I had to go through the third-party board manufacturers. I emailed all of them. I tried every avenue to get any sort of information. I would have overpaid for one potentially. At this point, like if you want to get the most efficient GPUs, you're looking at the Nvidia A series, you know, A2000, A4000. That seems to be the best bet, and at the very least, you can kind of order this from like places like AliExpress with some luck. I believe that's where Red Panda got his. I have not bit the bullet on that. Right now, as you guys know, I am expanding into a little bit of Bitcoin mining before we move back into GPU mining, primarily to hedge just the farm. And that is what's going on. Speaking of which, let's talk about the farm. So mining profitability is down pretty significantly today. We are down a little bit on hash rate. Got a little warm out. You can kind of see as it got warm, the hash rate going down. And we just got to get some better ventilation in there. That being said, the estimated earnings for the day is $195 US. Pretty far down. Yesterday, we were over 260 for the day. So, you know, $70 down for the day. Pretty rough. And it could get worse this week, especially with the announcements coming from everybody as far as the government goes and seeing what happens. But we're also down on the amount of ETH at 0.0714. Now, I am dual mining with some TON, but only on a few rigs, not all of them. And we did pick up 10 TON yesterday. That's going to be about another $26, which is going to help supplement a little bit there. And then I got my Bitcoin miner online, and it is the Koi miner from BT Miners. Use my affiliate link for that if you are going to purchase through BT Miners. And we have it online. We will have an official review coming out. I do want to give it a couple more days just to see like where we sit at. Now, this miner in particular that's showing right there, I'll give you guys that, is going to be the Koi Miner C16 Pro 98 terahash a second, okay? And one of the things that's happening is all the hash boards are extremely close together. And so I think that the heat keeps this average hash rate down. You can see for the past 24 hours, the average hash rate's been around 93 terahash a second. And let me check on what's going on with the kids here real quick. Sorry for the brief break there. Anyways, the big deal here, just if you guys want early numbers, you're talking about 3,400 watts at the wall and 93 terahash a second on average for the past 24 hours. You can see it has heights up here where it'll hit 100 and then kind of dip down. Whenever it kind of goes up to the advertised, close to that, like, you know, 100 terahash or whatever, it does get hot and it comes back down. So we're going to pull all the logs. Part of the reason for pulling the logs is to see if there's any throttling going on. Initially, when I got it stood up, I did check the logs and there was some evidence of throttling on some of the hash boards. So for the price though, 93 terahash a second, it's not bad. And then that has translated into basically this yesterday, 0.0004 Bitcoin, which essentially translates into about $16 or $17 right now with the price of Bitcoin. Now I am trying to merge mine, but I haven't gotten any rewards for the merge mining, and we'll talk about that as well later on. So that's kind of it as far as all of my mining profitability goes. Now we could start getting into, I do have the L3 Plus online, as well as like the mini Doge, and we do have some handshake going on. They're pretty insignificant as far as pricing goes. Maybe the most significant would be Dogecoin, depending on the price, right? I think total on the L3 Plus, along with the mini Doge miner, the Voscoin one or whatever, with both of those running together, we get about 62 Doge a day and about 0.01 Litecoin a day, because we're merge mining. So let's take a look at the pools. Let's see if we have any crazy changes going on here. Foundry Digital, 35 exahash to 200 exahash. No crazy changes. Let's take a look at Ethereum. Ethereum is still right around that 1 petahash a second. A slight drop in difficulty. Ethereum Classic. A huge drop in hash rate here just recently. Does anybody know what happened exactly? So it went, I say huge, not huge, just looks huge. I mean, it is a whole terahash that came off of it though. So we had a terahash drop off of here, off of the network. It looks like a little bit came off of Ethermine, a little bit off of Hivon, a little bit off of 2 miners. XN pool had a drop off. F2 pool had a drop off. White or Spider pool drop off. So Ethereum Classic, something's going on the network, because that's across the board. Let's take a look at Flux. Flux is down to 2 mega solutions a second. Is Flux still experiencing any sort of solo mining going on? The solo mining looks to have completely stopped. The last solo mine episode looked to be on February 18th, which was more than 3 days ago. So the solo mining on Flux is completely stopped, it looks like, right now. So remember last week, this was happening last week. We were having basically solo mining going on and off all the time. Oh yeah, profitability on the 3090, it's bad. $3.45 a day after power. If we correct for Zell hash, you got Flux down here at $2 a day on a 3090. Pretty rough. If we look at the 2080 Ti and calculate that out, you got Ethereum at $1.63 a day. Flux pretty down, pretty hard at $1.33 a day. Conflux is actually on the Octopus algorithm for the 2080 Ti is outperforming ETH before power, and then obviously after power here, it's still below Ethereum. It does still show this Zell hash at being pretty high at $1.75 a day. Let's go ahead and look at the players' GPUs real quick, because we're curious what's happening. Ethereum at 83 cents a day, under $1 a day for an RX 580. Ethereum Classic, 39 cents a day, which is still outperforming Firo, who would be in third at Ergo in third at 37 cents a day, thanks to its low power consumption, followed by Firo. And there you go. Oh, buddy. Let's go ahead and take a look at Ravencoin. Ravencoin at 3.91 terahash a second. Network hash rate at 4.89 terahash a second. There's quite a bit of solo going on Ravencoin. A lot of people playing around with solo. It doesn't look like any huge hash rental is going on though on it. Looks like just individual farms and so on. Let's take a look at Ergo. Get that sorted out. Ergo's at 14.54 terahash a second. There's a lot of exciting stuff going on with Ergo. My favorite thing that's going on with Ergo right now is wrapped Bitcoin actually making it there. But it won't have any of the ties to the current wrapping of Bitcoin like on Ethereum. So it should be completely decentralized wrapped Bitcoin on the Ergo blockchain. That's really exciting. Just a quick note. I did mean to pull that article. We'll try to talk about it later this week. But I think it's of importance to be aware of. Let's go ahead. Look at ASIC miner profitability. The KD6 still in first place, but it's down on profitability down to $131 a day. KD5, all the usual suspects in order. What is an S19 Pro doing? It's doing $14.49 a day on Digibyte. So there you go. Nothing too great happening there. Did we get any sales on BT miners today? The X5's at 2,000. They've brought the KD box down to 5,500. They do have an S17 here for 4,550. I believe that has come down a little bit. Somebody was asking about that one. I need to go tweet that to them. So there is an S17 on there for 4,550. 73 terahash Bitcoin miner. One of the things I'm learning about the Bitcoin miners, just to maybe give you guys a little bit of perspective. You basically have two types of power inputs, and depending on the company, you could get yourself in a weird spot because Bitmain's going to be a little bit easier because they use the standard C13s. And essentially you can still split that power off of like a standard like 30 amp PDU and probably be fine because essentially you're going to have two, each cord's going to be like 8 amps. So you could use a PDU still there, meaning you would basically, depending on how the PDU is configured, you would plug it in like I'm talking about a standard APC or Trip Lite or something like that. In the case of the coin miner, which is important to note because that's the one that I just purchased, it'll be in the review. We'll talk about it because this is going to change what you guys do with power, right? The coin miner, where is it? The coin miner, and they don't even have a picture of it. The coin miner doesn't look like this. Don't worry, we'll get a video out. It uses a C19 plug. And that C19 plug is a single 16 amp plug. So it's going to require like the 240 volt 16 amp off of a single plug, which is going to change essentially how you do your power setup, right? So in my case, we ended up going through ASIC miner panels, which is a good resource. I'll show you guys that one too. And you can come in here. You can either do full panels, which my neighbor has one of these. They're pretty cool. For me right now, we went with the 50 amp. And then we did the 1450p. This one would be essentially the same plug that would be for like your stove. And then that splits into essentially 4 C19s. So you can plug that in. If you were going to be getting the T17, then you would grab, either you can have an electrician do this, or this is an easy way that you can do it yourself. Easier way. Be careful with these. Always make sure you check the connections and that they're all safe. that being said, they also have like a C13 option here, which would change. But essentially, because it has 8 of these, right? Any 90 terahash above or 70 terahash and above that's going to require 2 of the plugs, still only going to, you know, off of a single 50 amp, you're going to get 4 miners off of it. So that's going to kind of judge how you go through power for these things. So I wanted to mention it. We have a couple minutes for questions and answers, and then we're going to get going. So questions and answers are as follows. Super chats, never required, always appreciate, easiest to read, so I usually read those first. And then @SonOfATech will tag me, and it'll be good to go. Full disclosure now, €5 says, do you know where to find the exact material composition and weight for Bitcoin miners? If not, what percentage in weight do you think the chips have, like one on a S19? I do not know. The weight, like the actual, I have no idea, bro. I know like the specifications are pretty clear on the, as far as like total weight, but are you talking about the boards themselves? And is that to build shelving or what? All right. Detroit Irish says that Newegg does have the CMP30HX for $866 open box. It's a terrible price. CJ Vic says, @SonOfATech, the Fed not being able to trade single equates equities, I think is what you meant. Single equities doesn't stop them from participating in ETFs, which can be largely weighted in a single equity. Thanks for the clarification, CJ. L Dude says, @SonOfATech, APW3 or ATX PSU for an L3 Plus. I use the server with the breakout boards so I can power multiple of them. Paul says, I'm never going to pronounce your name right. Sorry, bro. But thanks for always being here. Says, I saw that Intel BMC miner article 2. Was the writer having a stroke? It was hard to follow. Another article listed the Gen 2 miner as 2200 watts rather than 3600 watts. So it's the BMZ1 is the specifications that we have. BMZ2 we do not have specifications on. So what you could see, which would actually make sense, is probably something like a 2200 watt 42 or 40 terahash a second revision 2. That would make more sense to me right now. @SonOfATech, past free streams, you have been saying that NiceHash rentals are using 2 miners. Any idea why they prefer 2 miners over miner pool when miner pool is ranked higher and seems to be getting more rewards? No, I don't know why. Maybe they have a better connection to 2 miners. We got Serpent is going to be streaming after us, so we will link his channel. Thanks for Serpent stopping by. Wadswinkle says, @SonOfATech, when you bought your coin miner, do they charge you sales tax? No. But be careful. Now, I have a company to put that under in Texas. You would have sales tax or whatever the sales tax in your state would be. So just, you know, have your tax exempt forms ready. Agrigalker Visual says, @SonOfATech, have you seen there's profit swapping pool coming for Ergo? No, I haven't seen that. That's interesting. Golden Wolf says, @SonOfATech, good morning from Seattle. Good morning from Texas, Golden Wolf. Corey Ford says, as someone who only bought about 5K or with only about 5K to spend on expanding, would you recommend buying an older Bitcoin miner for or a few light hash rate cards or full hash rate cards? All right. So I think it comes down to power. Noise tolerance, a lot of stuff like that. And then your personal kind of convictions on where you think the market's headed. If you're already mining, what the size your farm is. You could go any route that you want. I don't really make recommendations in that form. You should always be looking at like what your best returns are going to be on for the most part, unless you're doing something like I'm doing where like the Bitcoin mining isn't more profitable than the Ethereum mining right now, but it hedges me in a position where like it's more long term. And part of that is just wanting to go more long term, right? All right. Let's see. Arcade Cup says, Ask Son of a Tech, does dual mining Ethereum Classic and TON work yet? Tried last night, had issues. I haven't tried it. I don't know if it's going to work or not. Scott Schultz says, Ask Son of a Tech, did you hear about KuCoin going down due to AWS failure yet? Not reassuring for the future of all the coins built on AWS infrastructure. I mean, obviously, the biggest problem that we have in general as a whole with cryptocurrency, decentralization, and Web3 is basically bridging traditional infrastructure like Web 2 infrastructure over to Web 3. And then the problem of the fact that Web 3 is going to be traditional infrastructure. I fully expect a majority of these centralized exchanges, though, to be on traditional infrastructure. So that's not really surprising. It's pretty sad that they didn't have that configured properly for their load balancer. And this is a spot where there is potential for something like Flux, where even though you have nodes for Flux that are running on Google or AWS or whatever it may be, if AWS failed in the case of if it was running on Flux, theoretically in the future when Flux is able to handle something like that, let me be clear, their load balancer could fail you over from AWS over to Google or AWS over to Microsoft Azure or AWS or any of those over to some dude running a node in his house off of a Raspberry Pi, hopefully, right? Obviously, some of that processing power would go over there. But their load balancer does function in that manner to where Web3, while the nodes would be running on traditional infrastructure, Web 2 infrastructure in centralized data centers controlled by the top three, from the company's perspective that's actually running the software and running the website, whether that's KuCoin or whatever it may be, the benefit to them from Web3, which is going to be your sales point. So this is coming from me and my history as a cloud solution specialist. If I'm sitting down with a client and I'm convincing them to move to Web3, I'm telling them this. Yo, the cool thing is even if Amazon has issues, you'll fail over to Google. You'll fail over to Microsoft. You'll be good. You can literally fail over to any infrastructure because the nodes are spread across all of them. And that is where you're going to sell that migration over to Web3. That's where you're going to sell it. L Dude says, at Son of a Tech, Bitmain versus ATX PSU. You can look, you go to Parallel Miner and just get one of their kits with the breakout boards. Don't buy an official Bitmain power supply. Also, if you work out the power correct, it's very possible that you can power multiple L3 pluses on a single, like 2400, buy one of the big 2400 watts, which is what I use. And you can power multiple L3 pluses. Tim says, at Son of a Tech, will Firo lowering mining rewards from 50% to 20% make it a dead project for GPU miners? Who was it that somebody had an interview yesterday? I retweeted it. I've not watched it yet. What Firo is doing does seem not good. People are asking if my ASIC neighbor has a YouTube channel. No, most of these guys do not want to be on YouTube. It's very understandable why. Jacob Twitchell says, at Son of a Tech, do you have an opinion on parallel miner PSU? Planning on bulk order of 10 for 95 each, but I heard people talk about them dying early. I've never had any die. You just had one die after 2 months. I've not had any die, and I've had some for like 4 or 5 years. So I don't know if you guys are over. You need to work the numbers out better and making sure you're keeping under 50% of the load of a platinum power supply to maintain the top of your efficiency rating. But I'm wondering if you're over allocating some of them. Personally, I never had one die though. So that's odd. Wuchin 2003 says, at Son of a Tech, do you think as more institutions buy Bitcoin means that Bitcoin will follow Wall Street as it does the last months? I think institutional investment into Bitcoin does mean that it follows Wall Street. Unfortunately, does that continue? Not necessarily. As the supply gets smaller and smaller and more of those coins get locked up into long-term holds, depending on how people treat it, it could break away from that. Or on the complete flip side, it starts getting utilized more and it gets utilized more as a currency, and then that breaks it away from the traditional markets. But I don't think that's going to happen anytime soon either. We have a $5 super chat from CJ Vic. Says, thanks for another great show. Thank you, sir. I do have 3 minutes here, so I'm going to try to hit whatever else is left. So ACQ says, thoughts on the Ukraine stuff and its effect on crypto and equities markets. I posted a meme the other day, and I feel like it's relevant. And probably like... because I don't know. So when I don't know, I usually just like memes and to make fun of stuff, right? Because we don't, unfortunately, we the people that have no information on what the ruling class decides to make a decision on. But it came from Altcoin Gordon and said, then we made them think World War III is happening and they sold all their Bitcoin. That's how I feel about it. I think Bitcoin's more of a threat than Russia to the U.S. government. I think Bitcoin's more of a threat to the governments as a whole than war, right? Because war, all you got to do there is send all the plebs out to fight for you, right? And you get to make more money during that process. Bitcoin means everybody else gets to participate in the market with you, in a market that you had a monopoly on, or an oligopoly on. Luke Troyer says, that's Son of a Tech, is there an easy mining calculator that shows how much ETH the GPU is mined since it was added to the farm? No, I don't know of anything that would do that necessarily. Andre Mora says, ask Son of a Tech, do you think Biden is okay with the crypto market or he's not okay with it? I know that he received donations in Bitcoin. So from that perspective, if he's benefiting from it, I think that he's positive on it. Does he want all the people to have it? That's where I question it. I think possibly not. But I don't think it's just Biden. Like, I don't think Biden's I really honestly don't think the president's pulled as many of the strings as you guys like to. And the arguments over Biden versus Trump versus Bush versus Clinton versus who. It doesn't seem to matter that much. I think it's all a game, a distraction. I think we all are getting caught up in those distractions and those pointless arguments. It's like, I assume people in the government just kind of giggle at people arguing on the internet over which president they support. Detroit Iris says, "Ask Son of a Tech, are you going to cover the Firo fiasco sometime this week?" I need to. I need to learn more of it, though. Mention says, "Ask Son of a Tech, do you have an overclock video for a 3070? Yes, but it's pretty old. I guess we could try to do an updated one. But they're pretty easy to overclock, really. All the Nvidias are. Henry says, "Ask Son of a Tech, thoughts on octo miners and server cases for GPUs." So I did do a lot of the Roswell cases for a while. The problem with the Roswell cases is the single power supply, and it's really not enough to power. Like, if you're going to do like an 8-card rig, and you can throw the server power supply fans in the front of the Roswell, they're fantastic for like a 6 to 8 card rig of low power GPUs, like single 8-pin power connector GPUs. Talking, RX 580s, we're talking 470s, 570s, we're talking 1660s, 1060s, stuff like that, 6600s. Those are great in those Roswell cases that only have a single power supply option. Anything above that, you want to stay away from those cases. Then you want to move into, for the server cases, the octo miners. The octo miners are going to pull a lot more power because they got those big fans going there. Depending on your mining setup, those octo miners make a ton of sense. It's by far the most reliable. You don't have to spin your GPU fans as much, and the hot swappable power supplies make it awesome. It's really, though, comes down to a price thing, price to performance, what you're getting for it, if you have to order in bulk, and so on. I really like the octo miners. Like I said, the Roswells are like that for that budget mining rig build. Really nice because they do have rails. If you got to order the rails separate, but you can rack them. But so you could potentially just have racked up like lower power mining setup, and it would keep them all cool as long as you get the right server fans and so on. Open air frame is great until your ambient temperature gets too high, and then that's kind of rough. Even open air with fans. So it's going to depend on your setup and how it's all like configured. If you're getting enough ventilation in there, open air is going to be the cheapest way, but there is an argument for the server cases, and then obviously the stipulations I made depending on the type of server case. Emo says, "Ask Son of a Tech, do you sell your mine coin even in a bear market? Do you have a hodl portfolio?" I don't hold. That's the thing, is like, I don't hold. I value revenue. And if I'm holding, I'm not purchasing more equipment to create more revenue. And that's my personal outlook on it. Other people are going to disagree. You make your own decision, do your own research as far as that goes. All of that strategy comes from a book I read called Rich Dad, Poor Dad. Mr. Miles says, "Any thoughts on why self-used exchanges list Raven even though it's fully open source and has no pre-mine and so on?" My understanding is that there are compatibility issues when I talked to Crypto.com about it, because you can buy Raven coin on Crypto.com, but it holds it in its own custodial wallet. You cannot transfer it out, and you cannot transfer Raven coin in. I'm not a developer, and I don't really know exactly why but there is some sort of compatibility issues with Ravencoin that have been preventing exchanges to easily implement it into their systems. So whatever your thoughts are on Ravencoin, you love it, you hate it, whatever it is. The reason it's not on exchanges, more exchanges, isn't necessarily just the exchange's fault or decisions. Like I said, you can go buy it. You can buy it and sell it on crypto.com, which is the second largest exchange out right now. You can't deposit it. So the miners are screwed. So, to me, being able to buy and sell Ravencoin crypto.com is pointless. I don't want to buy Ravencoin. I want to mine it and sell it when I need to. So that's kind of where I stand on it. And that's my understanding. That's the answers I've gotten in regard to Ravencoin. Compatibility issues with the chain on those centralized exchanges. Those are the answers I've gotten. Some of the other ones, you know, it's like we're working on it, blah, blah, blah. Ravencoin, it's been like we're working on it, but we're having compatibility issues. And then we're going to end it right here. I got to go. But CJ Vic says, Ask Summit Tech, when is the BBT collab coming to the channel? BBT is going to be giving me his schedule today. I basically told him pick any day, Monday through Friday, 9:45 a.m. Central Time. He will be coming on the channel and selling me on Ravencoin. Maybe we can ask him about the compatibility issues. And he can let us know. Maybe he knows. Maybe he doesn't. I'll even actually message him now and say if he can, you know, and so he can be prepared. The idea for this one with Bitsby Trippin' is basically going to have him come on the morning show and sell me on Ravencoin. So it should be kind of fun. Look, I know all the good things about Ravencoin. It's the closest to Bitcoin. The fundamentals are there. Blah, 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 blah. Layer 1 integration of, you know, NFTs. All that stuff sounds great, but it doesn't seem to be coming together right. So maybe the more we talk about it, the better it'll get. Thanks for watching. Be sure to hit the like, comment, subscribe, notification bells, and stay tuned for more content. I'll see you next Tuesday or, you know, tomorrow at 9:45 a.m. Central Time. Thanks, and have a wonderful day.